The United States housing market shows a surprising trend. There are now many more people selling homes. There are fewer people looking to buy homes. This change is quite significant for everyone involved. Data from April 2025 reveals this growing gap clearly. Nearly 500,000 more sellers exist than buyers. This is the largest difference seen in many years. Redfin started tracking this data back in 2013. This imbalance between sellers and buyers is notable. It suggests the housing market might be slowing down. For a long time, buyers faced fierce competition. Now the tables seem to be turning slowly. Sellers might find it harder to sell quickly. Buyers might have more choices than before. This shift creates a new dynamic in real estate. Understanding this change is very important now. The sheer number of homes available tells a story. The count of homes for sale is now very high. It is the highest it has been since March 2020. That was when the pandemic first began to spread. This increase in listings gives buyers more options. It means sellers face more competition among themselves. They need to make their homes stand out more. This can be a challenging time for many sellers. On the other side, the number of buyers is low. It is at its lowest point since Redfin began its tracking. There was one exception to this low buyer count. That was in April 2020, during peak pandemic uncertainty. This drop in buyers shows a cautious approach. People are thinking carefully before making big purchases. The dream of home ownership faces new hurdles. This low demand impacts the entire market structure. Several key factors contribute to this market imbalance. A major issue is the current affordability crisis. Homes have become very expensive for many people. Wages have not kept pace with rising property values. This makes it hard for first-time buyers especially. Saving for a down payment is a big challenge. Monthly mortgage payments are also very high. Many simply cannot afford to buy a home now. Trade tensions also play a role in this situation. Uncertainty in global trade can affect the economy. When businesses are unsure, they may slow hiring. This can make potential home buyers feel insecure. They might worry about their job stability. Fear of economic slowdown can delay big decisions. Buying a home is a very significant financial step, so economic worries make people pause and wait. Recession fears are another important contributing factor. Talk of a possible recession makes consumers cautious. People tend to save more during uncertain times. They avoid taking on large new debts. A mortgage is often the biggest debt someone takes. Therefore, recession anxieties directly impact buyer numbers. If the economy looks weak, buying a home seems risky. Many prefer to wait for a clearer economic future. A recent survey highlights this waiting game. Bank of America released findings on May 28, 2025. It found that 75% of prospective home buyers are waiting. They're hoping for home prices to come down. They also hope interest rates will fall soon. This large group of waiting buyers explains the low demand. They are actively choosing to delay their purchase. This collective patience significantly shapes the market. It seems strange, but home prices are still rising. This is happening even with fewer active buyers. The median sales price for existing homes went up. In April 2025, it rose 1.8% from last year. The median price reached $414,000, a record for April. This marks the 22nd month in a row. Prices have increased year over year for this long period. This continued rise puzzles many observers today. One reason for rising prices is the type of homes selling. Perhaps more expensive homes are comprising sales. Another factor is the lingering effect of past demand. It takes time for market prices to fully adjust. Sellers may be slow to reduce their expectations. They remember the recent hot market very well. They hope to get the high prices seen before. This reluctance to lower prices keeps the median high. Mortgage rates are a very big part of this story. Currently, the average rate is just under 7%. This is for a standard 30-year fixed mortgage. This rate was reported as of May 29, 2025. High mortgage rates make buying much more expensive. They add hundreds, even thousands, to monthly payments. There is also a chance rates could rise even further. Unrest in the bond market could push them up. Despite high median prices, some changes are appearing. Sellers are starting to feel the shift in power. They are increasingly offering concessions to buyers now. This might include paying for closing costs, for example. Some sellers are also cutting their asking prices. Listings are staying on the market for longer periods. This is different from the fast sales of previous springs. Karen Pohl, a Las Vegas agent, notes these trends. Experts are looking at what might happen next. Redfin's head of economics research is Chen Zhao. Zhao stated that Redfin estimates a small price drop. They predict a 1% fall in home prices. This would be by the end of the year 2025. A 1% drop is not a huge crash, but it is a change. It suggests the peak of price growth may be past. This offers a glimmer of hope for waiting buyers. The ratio of sellers to buyers is a key indicator. Chen Zhao also noted how this ratio works. It typically predicts home price growth, but with a delay. The lag is usually about 3 to 6 months. Given the current large gap between sellers and buyers, we might expect to see prices soften more later. This data suggests a potential shift is coming soon. It will be important to watch this indicator closely. So, what should potential home buyers do now? Patience could be a virtue in this market. If prices and rates do fall, waiting might pay off. However, timing the market perfectly is very difficult. The predicted 1% drop is not very large. Personal circumstances should guide your decision always. Consider your financial stability and housing needs carefully. Explore all options and get pre-approved for a loan. For those thinking of selling their homes, new strategies are needed. Being realistic about pricing is now very crucial. The days of multiple offers above asking may be fading. Consider offering concessions to attract wary buyers. Be prepared for your home to stay on the market longer. Work with an experienced real estate agent. They can help you navigate this complex environment. Flexibility and patience will be key for sellers too.